Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So we came in this morning, futures were down about 6-7 handles. So we weren't sure what to expect. Will this be the start of a correction, or will we break the 10-day moving average? How do we handle this? What stocks can go green? Where should we turn to for clues? And one of the important things from the morning call we spoke about was the 10-day moving average in the spiders and also in the SPX. So if you just want to take yourself out of the equation and simplify it and not listen to everyone who's on TV talking about a correction, not listen to everyone on the blogs and everyone saying the market's ahead of themselves. If you just look at the action, which it's hard to do, intraday, I definitely didn't manage my positions the best that I could as far as buying into that dip and covering some hedges. I definitely mismanaged and I was behind the 8 ball most of the day. But if you take a look at it now and see how these things held support, if you continue to trust this trend until it changes, you're continually rewarded. So if you look here at the S&P or the spiders, you will see here is this, this chart. Okay, guys, I'll give you a quick broad view here. This is that macro uptrend that we've been holding the whole time. Here is that accelerated. I keep drawing both of them just because I want to show you the difference in time frames. And if you take a very, very close look, okay, which I'm going to do right now, you can take a very close look here, guys, and see what happened today to see if anything changed. Here, ever since we gapped or, started to accelerate out of this descending little channel, we've been holding above the 10-day moving average. Here, it tested it for maybe an hour, continued above it. Here was the 2 days we were below in the last 2 months. Then we tested it here, went off of it, and then the last 2 days we tested it and held. All right, this was, I think, last week coming into, I believe, Thursday. On the open it held by a penny. And then today, you look at the 10-day moving average, 136.08. Okay, and you look at the low of the 10-day moving average is actually 135.79. So it's a bit off. But then if you look here, as far as where it held, it held right there, and we came a little bit off the highs, but still, we're not in a perfect tape. But overall, you use this as a benchmark, and you did just fine. As far as off the bat, Apple had a gap to fill. They hit it hard, and then it just, not even quickly, but methodically went positive, pushed through that 120. I mean, not 120. That's how long this day's been. That 526, I think 29. Made a high, and then they tried to have a tug of war at the end of the day. If you look here at Apple, they tried to push it through and maybe create some weakness, which it didn't do. It pushed through this previous high of 526.29. Closed off the highs, but still closed relatively strong. It came in, filled that gap, didn't even get down to the 10-day. And then if you look at the quick 5-minute chart, it was somewhat, I wouldn't even say that methodical, because it was, everyone says all you have to do is buy every down, open an Apple, and you'll be fine. But if you look, this was the quick move lower, okay, and then it retraced. And really, this was when the trade got a little bit more calculated, because if you look here, this is where you had the big move off the lows. Here's some power into the previous Friday's resistance, held higher flag. So this is really where you could have had your methodical trade right around 522. You give a move to 524, and then that old high was 526, okay, which was right here, 526, like 29ish, and then you had a little bit of follow through before they tried to shake things up, and they did shake things up a little bit, but as of now, the daily still looks fine. It still looks intact. Let me get this behemoth thing out of the way, and it's moving along. As far as some stocks not looking back, let me just roll through them. MA continues to be a leader, continues to go. Here is your breakout. Here is your momentum trade. Boom, going higher. Visa still acts well, still methodically, coming along, looking decent. And then today, if you thought about, when Mr. Buff was on TV today, if you come back to me, he talked about 2 of his banks. Talked about Wells Fargo, and then he said the only bank he owns is JP Morgan. I had a little JP Morgan overnight. It was down 30 cents. And that's why we try and help each other. I was like, on the chat, I'm like, who heard what Warren said? Who heard what Mr. Buffett said? What did he say about JP Morgan? It's his only bank stock, this and that. And then as the day progressed and that video was played over and over and over again, the stock got better and wound up saving a decent portion of my day. And if you look at JP Morgan, you will see, stock just cleared, okay, this nice resistance area. I tried to buy it in the hole in this base, which was a 20-day moving average. It now poked its head above, closed decently well. If you look at the macro pattern here, you will see that It now has some decent room to this 40 area to 42 as long as this market stays intact, which it feels like we are as we continue to travel with that 10-day moving average. So now we'll see. Wells Fargo also had a nice move. Obviously, if you look at the reason why some traders are somewhat frustrated, here is when it broke above this trend line. Here's where it held. And you do have some kind of sloppy mess here, guys. This has not been easy. You buy highs, you get hurt. You short lows, you get hurt. But if you look closer here, you'll now see that perhaps this wide range green bar will control the stock. It now lags JP Morgan. JP Morgan eclipsed this area. Maybe Wells Fargo goes next. Goldman is lagging a bit. If you want to play a laggard that's still hanging around, I did buy some a little bit today. I haven't had some in a few days. I'm long in here. I guess if it were to get above this 118 and change and clear this level, it could continue. I guess I drew this morning. Hasn't happened yet, but it's worth the tier 1 to keep on the radar for a potential move higher. Again, as long as the 10-day holds, as long as the market stays intact, a lot of these things are going sideways and setting up for another move. So Goldman is on that menu for me. As far as Triple M, still looks really nice and tight, guys. Look at this channel here, guys. Channeling. I was hoping it would break out above 88.30. It didn't today. It's still in this nice range. I did sell some earlier in the morning, and then I took some and put some back on once I saw that the composure would stay in check here. So now, really, I would stay in tier 1 in this channel. If I would say a real stop here. Let me show you so you can see right there. I would say it really has to close below 86.75. So that's not a huge, I would say, drawdown. And you finally get an add if it could cleanly get above this 88.43 on volume. So until then, it could stay sideways for a lot longer. Typically they don't, but that's why it's on the radar. Boeing got a little weaker today. It actually, if you look at it in the scheme of things, it really didn't do much. I know it was a lot weaker earlier on. So for me, I'm playing for a breakout. I had, I guess, a little bit too much, so shook me out of some. I'm still in some Boeing. I will not add until it gets above this. Some people, that play it very tight, probably got out of all their position today as it's starting to break below this small ascending channel here. For people who are trading it a little looser, more of a swing, you could probably give it to here. This is like 73.80, and then some would actually even give it to below 73, but that's more of the macro trader who's not really looking at it. That's someone that is trading on a different time frame, because that's when somewhat the trade changes. So if we look again here macro wise, it's so hard to play these from momentum breakouts, but that's the only type of trade we have left to the upside if it continues. So see what happens right here, see if it does pull back. I did lighten up today in Boeing. I thought it was a little extra weak today, but we'll see what happens there. As far as Amazon, not really much to report. It was weak early on and held this minor uptrend. So it's really not a trade to the short side until it gets below 175 and stays below, and then you have 170, and then on the macro level, we've talked about it many times, you have a long way down, but dip buyers always come in here. So if you're anticipating it, don't let it dictate your day, just let it be a position. That's why I bought some Amazon puts, so the stress isn't there. So if it does happen, I'm in some, and if I get that intraday setup, I'll definitely take some more size. I tried shorting a little bit early on, and then it just wasn't ready, so I just avoided it. That's what you have to do. You have to really watch it like that. Google, still nothing done. Still hanging out in this overall mid-level channel here. So I did not do anything with it. We'll see if the market stays decent. Perhaps it can get going, and then we'll get back involved. But again, for you macro guys, buying it, which was a 200-day here, trading it for cash flow into the gap. Now it's setting up another channel. We'll see which way it breaks from there. IBM was weak early, but then it held up nice. You look at this IBM chart here. It broke above, actually I'll get it a little closer up for you. Broke above on Thursday, nice break, right? Above this 195, great cash flow. If you're in tier 1 here, tier 2, sold some. Now as long as it stays above this breakout area, you could draw your line, say beat me, which is 195, it should continue and hold, and then potentially, as I said before, we hold the 10-day, we continue trending, it'll continue. So you have to monitor these things close. For me, I'm in tier 1, I'm going to wait, and I'll probably add for cash flow. But today I added a little bit as the market looked good and it hurts. So, adding into some of the strength here is not something that's been working very well because we're in a tape where there's not that much momentum. You have to like buy them into support and then hold them through some, a rally. But if you pay up for them, the way this market's trading, it's definitely, kicking you to the curb in some instances, like the pull-in that we saw today at 340. After working all day to position in things for a nice close, all of a sudden that happens, and then you have to think twice about what you're going home with and what type of risk you want to put on. LVS I still think looks fine. I don't love all these topping tails right here, but that really doesn't mean much. It just means it's not ready to go. As long as it stays above this 50 and change, I think it's fine. If you want to draw two little areas here, there's your 10-day. Here's your upper channel. If it were to break this, I think it's buyable into this 5150. I'm in some. At the end of the day, this MGM broke a bit. So I heard some chatter that they're shopping around the block. I guess I can't say the word chatter, but that's what some salespeople said. But ever since it broke this accelerated uptrend, okay, it's been somewhat weaker. So if it were to break below this 1360, I do think the pullback will be buyable, but I'd rather see you buy it, right around here. Some of the moving averages could catch up. So this 1230 to 1250 would be an area I'd rather buy, considering it was just as high as almost 15. So there you go. Again, you ride trends, and when they change, you get out of the way. And if you're out of the way, you could buy a pullback if it comes in there. As far as GLD, still hanging around. Here's when it broke that downtrend on Fed Day. Nice move. Here's your descending channel that broke to the upside, and now it's just dripping lower. So I would say as long as it stays above this area, this high here is like 170, 107. That's probably a buyable area. So down open tomorrow in gold, it should hold if it's any good. Maybe it wants to test this moving average around 169.90, but that's an area that I would think if for momentum bulls, this is where they'd want to see gold hold. Gold hold. There you go. Some of the ags looked stronger today. Sperling was talking about CF at the end of the day. Closed pretty strong. Nice engulfing day. Engulf these four little bars here. It's showing relative strength. Mosaic, not quite a leader, but I know Joe likes this one, and it's been trading really well this year. You have a nice little bull flag pattern, from this area. So I'd say above this 60, it could continue. It's been behaving decently. POT also. Here's your 4-day pull-in. Not really leading, but but if you want to play a laggard, that's it. I'd say go with your CF. I know it's harder to play some of these things as they're near the highs, but you always get more bang for the buck out of your leaders, and we love bang for the buck here at T3. And there you go. Engulfing day didn't really pull in. Gets above this area, shorts beware, and longs you'll get rewarded there. So to make a long story short, today came in, tested the 10-day, we held. Once we came off that area, you had to readjust pretty quickly. Some stocks traded better than others. You had to push down an Apple that was buyable, and then another quick move through those 52-week highs. IBM held its breakout level. Boeing a little weaker, Triple M a little bit better. The banks are really strong. If you put 1 + 1 together with JP Morgan, and if you were long with me on Friday, you saw it get snappy, and hopefully that helped save your day. Goldman's still kind of, getting in there, and it's not quite ready to go, but it's worth having on the radar, worth being a tier 1 just in case, so you could see the price action a little bit better. And then you have just one-offs all over the place, which I'm not going to get into right now. So it's been a long day for a Monday. If you came in long, you had a few decisions to make. You did get a way out of things. That's why longs are a bit more confident because, again, we've had like 110 handle down open this whole year, and you've been getting these 6 to 7 handle down opens, and at least they're giving you ways out so you could salvage the trade. You can make your decisions on whether you want to cover your hedge, and then get long, which would be the ultimate way to do it. I typically have these hedges on so I could, on a down open, cover the hedge, make some cash flow, use the cash flow to fund some better longs, but it's still hard to do that in the last week and a half or 2 weeks when it feels like we're going to break. So you lighten up risk, you add to some shorts, you get spun around like a little school, and then you don't feel so great at the end of the day. That's happened a few times, but it is what it is. That's trading. Just have your thesis, stay with it until the market unconfirms it, and right now we're still riding this uptrend, and don't listen to the noise, the media, this and that. Follow the trend, and when that trend breaks and we see it decisive, we'll know, this is the time to switch gears. And right now, don't fight it, stay with it, and just, keep looking for those one-off trades, because this has definitely been a more have and have not type of tape versus in January. You could have been long 12, 15, 20 things, and they were all working together with momentum. So they're just not giving it away right now. You actually have to work a little bit harder for a living to create that cash flow. Scott Redler, T3 Live, the recap. See you at the morning call tomorrow with Brini Umar. Hope you enjoyed chat today. She did a great job, and I'll see you then.